New year, new taxes. The Canadian federal government is implementing some taxation changes that will affect Canadians who are looking to get into real estate in 2023. Will it affect you? Stay tuned to find out. Hey everyone, my name is Morgan Little. I'm a realtor and real estate investor based in Toronto, Canada, who on top of helping my lovely clients secure homes and investment properties across the province of Ontario, also makes entertaining and educational videos like this one to help you out there try and make sense of this crazy thing we call Canadian real estate. If at any time you want to discuss your real estate journey or just pick my brain, don't hesitate to book a call with myself by clicking my Calendly link in the description below. All right, let's talk about it. In a recent CBC article, they go over some of the taxation changes that have been made and that will affect those who are looking to get into the market to purchase real estate, especially moving here into 2023. We'll go over each of those. First things first is the First Home Savings Account, or FHSA. I don't know why that was so difficult to say. This allows certain home buyers to save up to $40,000 towards a home purchase with a maximum annual contribution of $8,000 over 5 years. These contributions are tax deductible, and withdrawals for the purchase of purchasing a home are tax-free. And please note, contrary to the name, this isn't just for first-time home buyers. Those who are looking to buy a home who haven't owned a home for 4 years or more are also eligible. And next we have the Multigenerational Home Renovation Tax Credit. This refundable tax credit will provide up to $7,500 in support for constructing a secondary unit for a senior or adult with a disability to live with family members. Eligible families can claim up to 15% of a maximum of $50,000 in home renovation costs to build the second unit. So if you have an elderly parent or someone with a disability that you'd like to have live with you in the home but kind of give them their own space, you can spend up to $50,000 to renovate your basement or renovate a portion of the house to create a secondary unit and then claim 15%, a maximum of $7,500 towards this renovation. The third one I'm going to talk about here today is one I've talked about in other videos, and that is the new flipping tax. In 2022, the government increased the taxes associated with flipping houses. Anyone who sells a house that they've owned for less than a year will be considered a flipper. And so the profits from the sale are considered business income and not just capital gains, which is how it worked previously. Now, I know quite a few people who flip houses. I work with a lot of investors, and they're having a much tougher time finding projects that will make sense for them in this new market at the end of 2022 and in 2023 when I'm filming this. So I could see this tax coming in the end of 2021 or early 2022 when there was a lot of money being made, but it seems a bit too little too late at this point, and I think it's really just going to slow the creation of housing more, which is what we desperately need. And I know I'm going to get some pushback. The argument against that is that it increases housing prices that people can't afford, but flips are often done on homes that are generally falling apart or in disrepair. So yes, once they're renovated, they're going to be worth more and sell accordingly, but it's also getting more inventory onto the market. And I think that's the biggest thing right now, because otherwise those would sit vacant or uninhabitable for most people. There are a couple exceptions to this tax, the flipping tax, and those would be selling because of a death or divorce. And that brings us to the fourth on the list, which is the Underused Housing Tax, or UHT. This is a national annual 1% tax on the value of vacant and underused residential properties in Canada, owned directly or indirectly by a non-resident. These owners who will have to file the UHT return for their property by April 30th. And of course, there are exemptions to this as well, which include seasonal properties and properties made inaccessible by a hazard. Hugh Woolley, a Vancouver-based chartered accountant, was quoted as saying, "I think that one of the dangers in these rules is the more exemptions you provide, the more tax planners and the clever, crafty people are going to come up with ways to get around the rules." He also went on to say that he could see this tax going up from 1% to 2 or 3 because the owners are nameless, faceless foreigners who don't vote. Also worth mentioning, though I've done a whole video on this topic, which you can see here, that what used to be a tax on foreign buyers, which went up from 15 to 25% by the end of 2022, has, as of January 1st, 2023, become a full-on ban on foreign buyers for the next 2 years. And one other noteworthy change that affects everyone, not just home buyers, is that the federal government has increased by 6.3% the basic personal amount, that's the amount of income exempt from being taxed, from $14,398 up to $15,000. As I'm sure we've all heard lots about now, we're expecting a recession in 2023. We may already be in it. How bad that will be remains to be seen, but this seems like a preemptive attempt to provide a little bit of reprieve from the effects of the slowing economy over the coming months. I'd like to know your thoughts. Let me know below. Do you think that these measures are beneficial, will have any impact on those affected by the rising home prices in Canada? As always, if you'd like to have a further discussion on your personal real estate journey or how these policies will affect you, feel free to book a call using the Calendly link in the description below, and I look forward to connecting. Till then, be well.